McConnell. He's our featured guest this time to take a look at tech giant Meta Platforms, which have fallen steeply this year. That stock down 31% from its peak late last year. John, what's going on with Meta?
I think it's a number of things. First, Meta stock in January the 1st was around $600, so it's down about 20%, or a little bit less than 20% since then. It had a big run going into the exuberance of Donald Trump's election in January and early February, up to $760. So once again, I think there's that recency bias in terms of saying where things were and anchoring to a high price. Secondly, the FTC lawsuit has taken place. They've been cross-examining Zuckerberg and Sheryl Sandberg yesterday. And so, he's having to drag up old arguments, and that's got people's attention, particularly at a time when people are worried about the stock market in general.
Yeah.
And then finally, I think an important aspect is, Meta makes its money through advertising. There's two issues here. How much advertising will decrease based on economic concerns? And that's a debatable question. And more importantly, about 10% of Meta's advertising revenues come from Chinese sources. Mm-hmm. And so that's going to be, once again, an issue of, how much do the Chinese pull back on their advertising because it's not possible to sell anything in America right now, basically. It's interesting, though, the president and his friends want to buy TikTok, which is a Chinese-based social media company. Yeah. And it's interesting that they're all keen to buy this when Trump's trying to close down trade with China. And a lot of the products that are advertised on TikTok are actually Chinese products. So, I think investors, generally speaking, and we'll talk about this later on, but I think investors, generally speaking, are looking at the present situation as that's going to continue in the future, when we actually know that we're in negotiations, that the situation, the tariffs are unsustainable. And so I think that feeds through to Meta as well. This stock may be vulnerable to some further downside for the time being. That certainly is possible. It's trading at about 20 times its earnings. It's growing at a pretty decent pace. It's certainly very healthy. It has, I think, some exciting news to come down the pipe fairly soon with regard to its glasses and its vision products. And I think if you have a view that's longer than, the headlines, it's a pretty attractive place to buy the stock.
Some people believe the regulatory issues will basically never go away for this company, that it'll always be facing some challenge. How material are the antitrust probes into this company?
Once again, you go back to TikTok. It's a fierce competitor. The FTC is basing its case on decisions that it approved, on acquisitions that it approved itself in 2012. The landscape has changed materially. I think most people that are thinking about this from a matter of law and from a matter of common sense view that Meta will likely win this. I don't think the America dream is work hard and success is rewarded. This case seems to be more around punishing success and investment. So I'm not all that certain that this holds for Microsoft, it holds for Google, Amazon, anything big seems to be on the radar screen. But I think that the regulatory environment seems to be more, the FTC, the new chair of the FTC, seems to be focusing more on making sure that they don't clamp down on free speech, and particularly Republican free speech. And certainly Meta has gone that direction. There's more news recently, I think it's yesterday, in Meta's AI language, Lambda. They're actually making efforts to make sure that there are no social biases or political biases in the language models. So, my sense is that the regulatory environment is sort of peak right now. And once again, if you sort of look further down the road, and even if the FTC were to win the case, which is, a pretty small margin of likelihood, it will be appealed many, many times, and this will go on for a long time.
Right. In other words, the regulatory situation won't go away anytime soon. Will that be a cloud over the stock?
It is at times, and it isn't at other times. I mean, this has been an issue. I mean, in Zuckerberg's own testimony, he said in 2018 that there may be a point in time where we may be forced to spin off Instagram. He considered spinning off Instagram because it was eating into Facebook's profitability. So, you know, they're debating what happened 6 or more years ago. And yet these businesses have to survive in a highly competitive environment where they employ tens of thousands of people in America, high value jobs, huge taxpayers. Does the government really want to destroy this American exceptionalism, which is being questioned right now?
Off camera, you mentioned to me that a couple of Chinese companies are significant advertising platforms in and of themselves. Shein, which many people, including me, think of as a fast fashion company, more so than an advertising platform, and Temu, which shows up constantly in my own social media feed, so I'm familiar with Temu. But is this material, the advertising market share in China?
All Chinese advertising, it would appear, adds up to around 10% of Meta's advertising revenues. And so, I mean, in a worst case scenario, you could say that Meta's advertising revenues will fall by 10%. That's happened before when Apple did some things to it. But it's not necessarily that, you know, if those two companies are not bidding as aggressively for advertising space on Meta's properties, the advertising cost falls, and it maybe brings in other people who advertise. I think it's probably more of an overall macro concern and consideration in terms of how much do people reduce advertising spending, generally speaking, because there's this huge political uncertainty about what things are going to cost in the future. In many respects, this is kind of like COVID. In the sense that you knew it was going to come to America, you knew it was going to have a big impact, but you didn't know how bad it was going to be. And then all of a sudden, you know, stock prices fall in a major way, and in anticipation of the end of the world's coming as we know it, and then things start settling out a little bit. So my sense is, you know, and I would encourage investors to think about where the market's going to be in 6 months to a year, not where it is today. That's what investing is about, thinking about the future, not what it is today.